Good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond at the Contrarian Trader, and let's get to the pre-market activity here in the U.S. It is at current 4:34 in the a.m. Then we're going to segue into member stock chart requests. That's where we review the symbols that our members submit for me to review. All right, so yesterday we had our rate increase. I believe it's the sixth one in the past, 15 months or so. And while Goldman Sachs and Morgan Stanley were predicting a fourth rate hike in 2018, our strategy was no. There would be no fourth rate hike in 2018. The reason why, and I'll share the commentary over the weekend, the reason why I said there would be no fourth rate hike in 2018 was purely political. The stock market was already buckling with yields not even seeing a three handle yet. And they were buckling. They're breaking down. And you're going to come out and you're going to say that you're going to add another fourth rate hike? Folks, I don't even think there's going to be three rate hikes this year in total. Why do I say that? It's because Fed Chair Powell, who did a great job yesterday, I have to say, great job, is very, very political. To say that in recent weeks, the economy has showed strength, I don't know what this guy's looking at. The Atlanta Federal Reserve, its own self, began this quarter saying, okay, we're going to have in Q1 2018 GDP growth of 5.4%. As of last week, that was ratcheted all the way down to 1.8%. So in recent weeks, if anything, by the Atlanta Federal Reserve's own numbers, the economy's slowing down. And why must Jerome Powell be very political? It's because we have the midterm elections coming up. And while I support the president, he did the wrong thing. He embraced the rallying market. He should have been preparing everyone for a market that is long in the tooth, and which I don't think will thrive in a trade war which begins today with China. $50 billion in tariffs, and they will retaliate. What he should have been doing is preparing. If you're planning on going to war, prepare your troops, right? He should have been preparing everyone if it was his intent to go down the path of playing hardball with the Chinese, which I'm all for. Believe me, this is long in coming. And this is not a Barack Obama thing. This is a multi-president, the Bush dynasty, the Clinton crime family, and of course, the Obama Marxist socialist revolution. It's their fault. And this guy, Donald Trump, President Trump, is coming in to clean up the mess. How dare these Chinese demand that we hand over intellectual property and source codes as part of a deal to have access to their markets? To sign off on that was simply, honestly, treasonous. Now we have to have a trade war when we're at our most vulnerable. The chickens are coming home to roost. I digress. Let's get to the charts. What we're looking at here is a chart of the 10-year Treasury bond, not the yield, but the bond itself. And you could see that yesterday we actually closed down, meaning yields went up, despite the fact that Powell threw the markets a bone. This morning, though, these are going to be all 4-hour charts. This morning, you could see that we are rallying well off the lows. Yields are now under pressure, but I will warn folks, this is very early stage stuff. So there's no guarantee that we're going to have an up day in the bond market. And I'll tell you, the weekly chart, as it stands right now, this is Thursday morning, the weekly chart of the 10-year yield is breaking out. And clearly breaking out, not just marginally. But we have 2 trading days left to go. Let's see how we close out the week. If we break back down, I believe the low of the week is 2.85 on the yield. If we break down at or below that level, well then, in all probability, we're going to see more weakness next week, which should be bullish for stocks, right? There's only one problem. Simply take a look at the S&P 500. Remember yesterday morning, I said this, I believed this ascending flag formation was not bullish. I would prefer a descending wedge formation. That's a continuation setup pattern. What I believe this to be was a dead cat bounce off of an oversold condition. This is the 3 standard deviation Bollinger Band, not a 2. So to expect this downside trajectory to continue was not reasonable. You needed to expect a rally back, and that rally was very weak. In fact, they did break it out above the upper band of resistance. Then we reversed to close lower, and now we have broken down below the lower band of support. This is a continuation breakdown pattern. So at current, we are down 0.43% this morning, and we do have economic data coming out later today. Now, you may be asking, Bob, what did you do after the announcement yesterday? We bought, but not technology, not industrial stocks. We bought what we think will do well in the economy that we are beginning to see evolve. And that is a weakening economy with rising inflation, no matter what Jerome Powell says. If anybody believes that we are seeing sub 2% inflation, they're out of their minds. But that's the narrative that the Federal Reserve is going to push. You know what happens in an environment where you have the government, which is just simply flat out lying to you? You have stagflation. And commodities do quite well in that environment. That's what we've been buying. That's what we're holding. And we're doing very well. We're up on the year versus the Dow Jones, which is down. I digress. Again. All right, so S&P futures weak. We haven't closed out this period yet. We could rally back, close back above the support level. Let's take a look at the Nasdaq. The Nasdaq, a very similar story, but worse. We're down 0.67% on the morning. So very similar to the S&P 500. We were oversold. We had an ascending flag formation, and we subsequently broke down. So what you saw, in short, was a dead cat bounce yesterday. I should say Tuesday and Wednesday. Now we're breaking down yet again. Let's take a look at Bitcoin. Bitcoin is consolidating above support. Not much has changed since yesterday morning. We are trading with a 9 handle on Bitcoin. We are off the lows of the session, meaning this 4-hour bar here. But we are up on the day by about 1.29%. A lot of positive news coming out on Bitcoin. Whether or not those are planted headline news stories or not quite sure. Notice how much I trust the media. So a cryptocurrency guy, I would be looking to buy Bitcoin, and I'm becoming closer to a cryptocurrency guy the more I understand it. I'm reluctant to talk too much about the cryptocurrencies until I am better educated to speak intelligently about them. Until then, I'll talk the charts because that's my wheelhouse. So I would be a buyer of Bitcoin on this 4-hour chart on a close above this upper band of resistance here in yellow. So I think that the path of least resistance, short term anyway, is to the upside. But keep in mind, longer term, weekly chart, the trend is down. But we do not have a new weekly low yet. So we may be setting up here for a higher low way too soon to make that call on a weekly basis. So we're firming up on Bitcoin. Let's take a look at the dollar. Now, the dollar is extremely weak. And I have been bearish on the dollar for quite some time. Now, the dollar is going to get another knock this week or next. I believe it's this week, when the Chinese launch their own exchange for trading oil using the Chinese yuan. Now remember, this is significant because since the early 1970s, oil has been traded in US dollars. This would be the first that I know of anyway. I'm open to be corrected on this. But as far as I know, this is the first time since the early 1970s that there has been a competitor to the petrodollar. Why is this significant? The reason why it's significant is because in the early 1970s, for all intents and purposes, the United States broke the Bretton Woods Agreement. That was the agreement after World War II, where it was agreed by the West that the U.S. dollar would be the reserve currency of the world, allowing us to prosper like no other country in history. But President Nixon took us off the gold standard, and ever since that point in time, you have seen a decline in the value of the U.S. dollar. If you wonder why you need a two-parent household that needs to work nowadays, look no further than President Nixon taking us off the gold standard. It unleashed inflation. It has reduced our standard of living. And it has allowed for the fiat currency system to put us into a situation right now where it is dire. And I'm predicting that the U.S. dollar is heading a lot lower, because yesterday it was trading down below support prior to the announcement, and then after the announcement it broke down even further. Now today you have a continuation breakdown, and I mentioned yesterday morning, if we break down below this lower band here in red, it's all over for the dollar. We're going a lot lower. Right now we are fighting to hold on to this upper band of support. Now we're a bit oversold here. We may get a rally, but keep in mind, folks, there's a lot of pressure on the U.S. dollar. And what will do well in that environment? Precious metals, commodities. Let's leave off with gold. Gold, unlike the U.S. dollar, which it trades inversely of, it was up yesterday morning prior to the announcement. After the announcement, it rallied and rallied strong. We did close off the highs of the day because we became oversold. Look at how far we were extended beyond the 3 standard deviation Bollinger Band. We have since pulled back. We are consolidating gains. We are currently up 0.82% or $10.70 per futures contract. So I think that gold is moving higher here. We're very, very bullish. And once we get above 1365, we're going up to 1400. Once we get past 1400, it will mean that the U.S. dollar is breaking down to new multi-year lows. And absent Federal Reserve intervention, you'll probably see weakness in the U.S. stock market. And the stock market yesterday was very, very weak. And we have a strategy for dealing with the market. The market should have rallied yesterday. It didn't. It reversed the close at the lows of the day. It traded higher all the way through to the Fed announcement, and then it sold off. And that's after the Federal Reserve said, you know what, we're not going to do 4 rate hikes this year, only 2 more to come. They should have rallied. They didn't. That's a tell. There's something very, very wrong with this market. Join the Contrarian Trader and learn how to trade through this market profitably. Our strategy is already outlined. We revise and update all the time. So join the club. Let's get to member stock chart request. All right, let's kick things off with Zynga. Weekly chart. At first glance, I really like this chart. What we're seeing here is a successful breakout of an inverted head and shoulders setup. Here's your left shoulder, head, right shoulder. Here's your neckline. And we broke out several months ago, right here, May of 2017. Nice rally, a consolidation. We've created a trading channel. We did break down in February, but bounced back nicely to recapture support. So the weekly chart is setting up nicely. We have both lines on Stokes, back above the 50 level. Same deal on RSI. Volume is a bit meh. Let's take a look at the daily chart. All right. So let's go back to the weekly chart and I'll give you my thoughts here. What we have here is a lot of overhead supply right here, back here. In fact, let's use a monthly chart for a moment because we really want to get that higher level view of where the sellers are. And I think this is a much better chart than what is the weekly chart because you get a lot more history. Okay, so here you have it. A beautiful setup here. Again, here's an inverted head and shoulder setup, left shoulder, head, right shoulder, but on a longer term basis. So in short, what does this all mean? Head and shoulder setups. You could also say, you know what, you have a cup with handle forming. It all means that you have a very, very sound base from which Zynga is beginning to break out of. We're building the right side of the base. We closed at 3.94. We have resistance at about $4.10. Now, if you wanted to scratch the itch, show it in your portfolio, get rid of the impulse to buy, keep it very, very small because there's not much room between where we closed out yesterday and historical resistance at 410. But if we get a close on a monthly basis above 410, this is a buy all day long. And I'm not sure what the short interest is on this stock, but I'll bet you if it's high and we get a close above 410, you're going to see a rally up to $5.89 in a heartbeat. But that assumes that there's a large number of shorts. I don't know that to be the fact. You need to do your own research on that, but it would certainly influence my decision making in terms of position sizing. Daily chart, we saw a bullish key reversal yesterday. Now keep in mind, the markets are weak right now. Zynga did trade down with the market when the market sold off. So me personally right now, I'm not looking to buy any individual stock in the technology space. This is consumer discretionary, no less. I would rather wait for a close above 410 before I put on any type of risk. If Zynga can close above 410 in a market that is iffy, that's pretty bullish stuff. If the market rebounds after we get a dose of lower rates, if that does in fact occur, then Zynga will have some wind at its back. So just be careful here. I really like the technical setup. I do not like the market environment that we are in. That's the fly in the ointment, and you'll need to negotiate that somewhat. So just be careful. And that goes for any stock I'm going over here, not just Zynga. Verifone. Weekly chart. We have, at current, this week, broken out. We haven't closed out the week yet. 2 trading days left to go. And many times, people will think that, you know what, midweek, we've broken out. There's no way we're breaking back down within 2 trading days, folks. It happened last week. All right? Let's not hope when we should fear. That's probably the #1 mistake that traders make. I say this all the time because I like to remind myself, not just to pound my chest. Believe me, patience for me is a learned behavior. It does not come natural. I envy the person who has been gifted with patience as a natural behavior. That's why women many times make better traders, because they're more patient. They're more risk adverse. So if you're risk adverse, then you have every reason in the world, if you're looking to buy VERI, to wait until Friday, the final hour of trade, to ensure that we will get a close above this current support level. Now, if you wait until that final hour of trade on Friday and we're trading back down below it and you haven't pulled the trigger yet, you'll be patting yourself on the back for showing the wisdom for waiting. So it's a win-win either way. Might you pay up a dime or so? So what? At least you have the peace of mind of knowing that A, you have built your discipline as a trader, you build confidence, and B, the probability of you being right for an extra dime or so has been enhanced. So I would wait until tomorrow, being Friday. Stokes, double bottom setup and breaking out on a weekly basis, good stuff. But as I mentioned with Zynga, just be careful of this market. I am very concerned. This market should have rallied yesterday. It didn't. That's a tell. Now, perhaps it'll rebound today with yields dropping. The jury is out. We won't draw any conclusions just yet. Remember that the major banks had it wrong. Morgan Stanley, Goldman Sachs in particular, I cited them before the Fed announcement with members on Market Wrap, which I posted on Tuesday evening. I said that they were anticipating a fourth rate hike, each of them. They were wrong. We were right. I said 3 for political reasons. Perhaps they sat on their hands, they reevaluated, they reset their algos. So we'll see how we close out the day. If we reverse off of the morning's lows and close higher on the day, remember, I only went over 4-hour charts. Those aren't daily charts. They aren't weekly charts. We want to pay attention to the higher level view. So a 4-hour chart is just an indication, especially in the pre-market, of where the markets may trade. It's not indicative of where they would close. So right now it's not looking good, but if the markets reverse to close higher today, then I'll be changing my tune. So VERI, to close it out, is looking good, with the assumption being that the markets will rebound. If the markets begin to fall apart here, you're not going to want to buy anything, because while it's showing some relative strength right now, you can't expect it to last. Not with a market that's falling apart. Daily chart. A bullish reversal day yesterday. It outperformed the market. So VERI looks to be a buy. If you buy it today, I would use a stop right below this dotted blue line, and let's call it 1490. That would be a breakout point failure. Otherwise, I like the chart. I really wish that the futures were up this morning. I'd say, you know what, go ahead, buy it. It's good. It's a good-looking stock if we close above it the final hour of trade on Friday. But I have to throw in there is a caution flag on the track for this market. Therefore, Verifone, Zynga, all these stocks have a question mark next to them and their ability to continue higher. Now, the next two charts are from fellow member Johnny D. He wants to know whether or not KRC and BID should be shorted. Let's begin with the weekly chart. We always want to identify what is the trend on a higher level view. And honestly, there is no trend. We are in a sideways consolidation. We have a clear and defined resistance above at 72.75, as noted by these topping tails seen from the week of January the 8th through to the week of January the 29th. And prior to that, it was resistance back here, October of 17, and then it acted as support. So this is critical resistance right now. Now, we did sell off, we've rebounded, and we actually are at current trading above this upper band of resistance, now support. And we broke out last week. So the way I would play it is, A, I would keep a pulse check of the market going. If the market begins to fade and we take out the lows of the week and we appear poised to close down below this lower band of support, I would short KRC. And I would add on weakness, especially if we close down below $66 per share. Now, suppose we rally today. When would I look to enter a short position? Well, if we do rally, it puts into question whether or not this is a short anymore. So I would be cautious. But if you're dead set on looking to short the stock because your fundamental analysis tells you that you should be shorting the stock and that you're looking for a technical entry point for a short position, look at 72.75, because that's proven to be resistance in the past, and use a stop right above that level, because if we break out above 72.75, folks, in all probability we're heading higher up to this upper band of resistance at 76.55. So it's a two-stage approach. A, if we break down below this week's lows and close down below this support level, you can open up a short with a stop just above. If we do not break down and we rally and you're dead set on getting short, look to enter that short at $72.75 to $73 per share with a stop right above resistance at $73.26. RSI, lower highs. So we have a clear and defined downtrend on RSI. Let's go to a daily chart. So we have a rebound off of the February lows. Yesterday, we had an inside day. No new high, no new low. This is a sign that we may be reversing here and poised to head lower. We are seeing lower highs on price. In fact, we broke down below critical support, but rebounded. We had a double top, as previously mentioned. We pulled back from the 76.36 level down to 66.21. We rallied back. The February sell-off took us down below 66.21. That's a confirmation breakdown on a daily basis. If we break back down below this $68 per share level, it's a short all day long. And we'll probably head down significantly lower. So if you're looking to buy these shares, anybody out there picking up on this symbol on StockTwits or Twitter, I wouldn't be a buyer right now. If anything, I'd be looking to the short side. Bid, Sotheby's holding. This is very close to being a short. It's also very close to being a buy. Many times is a fine line. Now, let me explain myself. First of all, we have RSI, which is putting in lower highs and lower lows. So the downtrend is firmly in place on RSI. Not so much on price. We're in a trading range. But we're very close to the upper band of that trading range. And last week, we flashed resistance at that trading range, the upper band. This week, again, we retested, failed. We're trading near the lows of the week. We're rolling over on Stoke RSI. Now, we'll come back to this chart. On a daily chart, we have pulled back from the highs of last week. We're trading at support. If we break down below the support level, it's a short. But you need to see a close below the support level because in all probability, we'll head back down to 48.50, where in recent past, we have seen buyers step in and continue this consolidation. So if you see 48.50 or in that ballpark on a pullback, I would book profits on my short and wait to see whether or not we are going to break down below the lower band of support. Now, where would I stop out? Back to the weekly chart. On a rally and a close above 54.74. Because if we rally and close above 54.74, the stock just went from being a short to being a long, if that makes sense. The path of least resistance will have changed from being in a sideways with a bias to the downside consolidation to now breaking that pattern and now breaking out to new higher highs. So that's how I would trade bid. Last chart up, Baidu. I think that this whole internet space is in a lot of trouble. I have warned for weeks now. The Twitters, the Googles, the Facebooks of the world were painting a target on their back with regards to their censorship of free speech. In particular, the conservative movement. Now, you might think that the liberals out there, and if you're wondering, if I become a member, do I have to listen to this guy's political opinion all the time? No, only on my free commentary. But it does matter. If the political wins, I don't care which direction. I think they're all thugs. No matter what side of the aisle, they are all thugs. If it does influence our trade decision, I will talk about it. Getting back to the censorship of the conservative movement, the liberals out there, you might think would fight any type of regulation of the social media names. There's never been a regulation regulating anything that the liberals have ever disliked. And for those out there that were born in the 50s and consider yourself a liberal, you're not a liberal anymore. The liberals of the 60s fought for free speech. The liberals of the 21st century are complete and utter fascists. The last thing they want is free speech. So the liberals in Congress will applaud behind the scenes any type of regulation because that means they get control of the social media names, which are becoming far too big. And let's face it, Zuckerberg really screwed the pooch on his latest foray into controversy. This is not going to go away for him anytime soon, and I think that these stocks are going to suffer. The FTC has already announced an investigation. Baidu, very big company, dominant in China, where Google is not allowed to compete, and we're going into a trade war. I don't know, folks. It doesn't look good for Baidu. So in terms of technical analysis, we broke out 2 weeks ago. Last week, we barely held on to the breakout point. This week, we are breaking down. At current, 2 trading days left to go. This could be resolved. We could rally back here. At current, though, we have a breakout point failure or a bull trap on Baidu. Very bearish stuff. What does that normally imply? It implies that we will probably, if we close out the week at these levels, back down below the support level, current resistance, we will trade all the way down to this lower band of support, and there's a very good chance, much as what we did in February, we break. We are rolling over on Stoch RSI. Volume's fairly light this week. Let's go to a daily chart, see how we're setting up for today. Here's your breakout point failure. Both lines on Stokes, effective today, will be trading down below 50. As I always teach members, rallies tend to fade when you get both lines trading below 50. So, I don't care if you're a member, not a member, you took the time to listen to my commentary today. I don't want to see you lose money. So, I would encourage you, do not go chasing the stock if it trades higher in the morning. Wait until it rallies back and closes back above the support level if you're looking to get long. If you're looking to get short, I may scratch the itch if we close down at the lows of the week and then look to book profits at the lower band of support. And if that breaks, I would short fairly aggressively the shares of Baidu on a breakdown below this lower band of support and then add to that position on a breakdown below 207.74, because what does that signify? The path of least resistance has gone, back to the weekly chart, has gone from up to now down. But I would encourage you to wait and see how we close out this week. And possibly wait until next week, because we could get an announcement to avoid a trade war with China over the weekend. And you don't want to fall victim of headline news over the weekend. And I would look to short on a new weekly low next week. And that's it for this morning, folks. Everybody have a profitable trading day. Members, I'll be in the forum later on today. If you're not currently a member, I'll throw up the 14-day free trial offer. Come check us out. We will be looking to open up short positions in this market. We do believe that there is a lot of money to be made in this market, just not in the traditional sense. You need to keep an open mind, have a higher level view of both the economy. You don't need to know the economy. I'll talk to you about the economy. I'll walk you through it. But you do need to have that higher level perspective and avoid impulse buying. That is why many people lose money in this market. Let's get out of that vicious cycle, and we'll teach you how to trade this market profitably by using our contrarian trading style. Again, everybody have a profitable day, and I will talk to you soon. Be well.